Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's the weekend. Let's recap the action. Looking back, the broader market didn't completely break down, but man, that close was weak compared to earlier in the week. The S&P 500 eked out a tiny gain, but the Dow and Nasdaq slipped, and the Russell 2000 took a real hit. The big story? Friday. Higher oil and rising yields sparked a sharp risk-off move. Tech, AI leaders, small caps, they all got done. So looking at the weekly charts, we've got a major split between trend and momentum. The S&P 500 sitting right around 7,400 technically held the uptrend, but Friday's drop from record highs left a pretty ugly hesitation candle. No clean breakout here. The Nasdaq closed near highs, but it definitely felt like a reversal after AI leaders got sold, and the Russell 2000 was the clearest weak spot, dropping sharply, totally failing to hold its recent strength. Key support hasn't fully broken, but we didn't close at the highs, and that matters for Monday. All this technical action makes total sense when you look at the money flow. Where did the cash go out of crowded AI trades and straight into energy and defensive old economy pockets? Why? Pure macro. Firmer oil cranked up inflation anxiety, treasury yields spiked, and traders just refused to chase stretched tech into the weekend. Small caps lagging badly just proves it. Rates and financing pressure matter way more right now than broad growth optimism. Simply put, institutions are getting picky, not aggressive. Over the weekend, we don't have one massive shock to absorb, but risks are definitely brewing. Crude is still a live inflation variable. Any geopolitical or energy headline, boom, that hits Sunday futures and Monday's open. Keep an eye on crypto too. Bitcoin trades all weekend, giving us a real-time pulse on risk appetite for names like GBTC and speculative growth. And a quick warning, ignore the social media noise. Rumors about tariffs, emergency policies, or global conflicts are just rumors until confirmed. Heading into Monday, you want to be watchful, not complacent. Stock focus number 1, Nvidia. It matters because it's the absolute emotional center of the AI trade. Friday's selling in Nvidia was way more important than those tiny index-level moves. Why? Because it showed institutions trimming their most crowded winners first. Heading into the open, if Nvidia can't stabilize fast, the entire semiconductor complex and momentum baskets are going to stay under heavy pressure. Next up, Exxon. It was one of the week's biggest winners, perfectly capturing the shift toward inflation-sensitive leadership. As oil surged, money poured into energy, while traders dumped expensive growth stocks. That makes XOM a super clean macro tell. Heading into the new week, if crude holds its ground, energy could easily keep crushing it, even if the broader market stays choppy. Put Apple on your watch list for next week. It actually held up better than most of big tech during Friday's bloodbath. That relative strength. It tells us traders still want defensive, mega-cap exposure in tech. They aren't abandoning the sector entirely. If Apple stays firm on Monday while high-beta tech stays weak, that confirms a calculated rotation within tech, not just blind liquidation. GBTC is another massive watch. Remember, crypto trades all weekend while Wall Street sleeps. That makes GBTC a prime candidate to gap up or down right at Monday's open. If Bitcoin rallies over the weekend, it could spark a speculative risk-on vibe. But if it tanks, expect that same high-beta de-risking pressure we saw on Friday to bleed right into the open. Don't ignore Palantir. It stayed surprisingly steady while a ton of AI hardware and high-beta names got wrecked. That makes PLTR a critical sentiment tell. Heading into the open, if Palantir holds up better than the semis again, traders might finally decide that AI software can decouple from the battered chip stocks. Looking ahead to the week, the main event is Monday's cash open, especially after that fragile finish. Are yields, oil, and AI leaders going to stabilize or extend this reversal? Tuesday, we get pending home sales. Wednesday, FOMC minutes. Thursday is packed. Unemployment claims, the Philly Fed, and flash PMIs. Then Friday, we close out with U of M consumer sentiment. But honestly, the whole week comes back to 3 things: treasury yields, crude oil, and geopolitics. Keep your risk tight. To wrap it up, the broader uptrend survived, but that close showed serious fatigue under the surface. Easy momentum is gone. Investors are dumping AI and small caps and rotating hard into energy and defensive value. Over the weekend, keep your eyes on oil, yields, crypto, and the news cycle. Get some rest and be ready for Monday. That opening bell is going to tell us if Friday was just a quick flush or the start of a massive reset. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.